Thank you for joining us today for this webinar. My name is Daniel Fahn, and I'm part of the sales and distribution team at Pengana. Today, we're here to provide an update on the Pengana Alpha Israel Fund, which offers investors a gateway to Israeli-listed companies, whether on the Tel Aviv Stock Exchange or global platforms like the Nasdaq. But before we dive into the specifics, let's take a moment to reflect on the incredible country that underpins this investment strategy, Israel. Israel is a nation that consistently defies expectations. Today, Israel is navigating a war on 7 fronts, a situation that would test any country's resilience to its limits. Yet, even after 410 days of conflict, the Israeli shekel remains stable and the TA125 index is up. Who would have believed that? This remarkable performance speaks volumes about Israel's unique spirit, its robust economy, and the determination of its people. Israel stands apart in many ways, not least in its solitude. After 9/11, the United States had the backing of a broad international coalition in its response. Similarly, in the aftermath of various terrorist incidents worldwide, nations have often rallied coalitions of allies to respond collectively. But for Israel, the story is different. Despite having allies, Israel faces its challenges largely alone, without the kind of unified international support seen in other conflicts. And yet, despite the solitude, Israel thrives. With this resilience in mind, we've been analyzing the fund's performance. And as outlined in our latest monthly update, we've decided to remove the risk hedge that has historically been part of the fund's strategy, which we believe is to be in the best interest of unit holders. This hedge, primarily implemented through out-of-the-money put options, was designed to offer protection against extreme market movements. While it provided peace of mind, it came at a significant cost, reducing long-term returns and impacting performance, particularly during volatile periods. As highlighted by the current slide, the Israeli market tends to be more influenced by global economic factors, such as 9/11 and COVID, rather than by local conflicts. Despite geopolitical challenges, the investment environment remains robust, and we are extremely bullish on the long-term prospects of many Israeli companies. Current valuations are attractive compared to global peers, and removing the hedge will allow the fund to fully capitalize on these opportunities without the drag of costly options. The changes we're implementing are designed to benefit investors over the long term, but they also present the potential for significant short-term gains. As Israel moves towards eventual resolution of the current conflict, we anticipate a surge in equity markets. In addition, we're also revising the fund's performance fee structure to align with its new long-only approach. Beginning on the 1st of January 2025, the current performance fee, which is 20% of returns above a 4% absolute hurdle, will shift to a market relative benchmark. We'll charge a 20% performance fee on returns exceeding the TA125 index, better aligning our incentives with the fund's performance in the Israeli market. To provide deeper insight, we're fortunate today to have Sagi Ben Yosef and Gabi Dishi from the investment team at Alpha with us, as well as the CEO of Pengana, Russell Pillaba, for the Q&A session. Sagi and Gabi will take us through the fund, the key stocks in its portfolio, and how these companies have been impacted by the ongoing conflict. They'll also share what they're seeing on the ground and how they're positioning the fund moving forward to seize the opportunities we believe lie ahead. This is a pivotal moment for the fund, and we're excited to share more details. They'll be speaking for 25 minutes, and after that, there'll be time for questions from the audience. So please enter your questions into the Q&A box, which can be accessed from the icon on your screen. I'll now hand over to Sagi and Gabi to dive deeper into the portfolio, the stocks, and their forward-looking strategy.
Thank you for joining us today. My name is Sagi Ben Yosef, and the title of the webinar is Investing in Resilience, because we truly believe that in our presentation today, you will understand why we chose to call it this way. We believe that with all that has happened, Israel is at a point which represents one of its most promising investment opportunity. As Danny mentioned, and as you all have read in our letter, the change we're commencing starting in 2025 will, in our opinion, enhance even further the upside potential of our returns. We will discuss the change in strategy in the fund in the second part of the presentation. We're an Israeli-based equity fund manager with 20 years of a track record managing long equity strategies. We manage $700 million on behalf of private and institutional investors, and the founders and key investment people have been running the funds since inception. We decided to use the phrase, "It's always darkest before dawn," because Israel has been in the past year in its darkest period. We've paid a heavy toll, but we're definitely seeing that the dawn is near. Israel's unique characteristics, which we will elaborate on later in the presentation, will in our mind generate a strong recovery cycle of accelerated growth once the war is over. Our resilience in times of war and our ability to show a rapid recovery has been demonstrated numerous times. We have done it before, and we will do it again. We believe that the unfortunate war that was imposed on us and its current outcome, where militarily Israel has the upper hand, together with the new elected president in the United States, Donald Trump, has the ability to create a new balance of power in the region. We believe it will bring new modern Arab countries to join the Abraham Accords, which are the peace and business ties we have with countries like Abu Dhabi, Dubai, Bahrain, Morocco, and hopefully Saudi Arabia. Next slide, please. So what are the economic consequences and challenges that Israel faces? So first and foremost, the tremendous cost of the war, which is estimated around $55 billion. This definitely represents a heavy burden on the economy, which caused a rise in the government deficit budget to 8%. It also pushed our debt to GDP ratio to reach approximately 70% from the pre-war level of 62%. War creates inflation, and the longer the war is, it will have an effect on the Bank of Israel goal to reach the target inflation of 1 to 3%. The current inflation in Israel is 3.4. Higher for longer inflation could also cause the Bank of Israel to delay future interest rate cuts. We could see as well a currency devaluation, a threat of currency devaluation to any country in the state of war is evident, but there are two things that stand out in Israel's case that are supportive of a complete different outcome. The first thing is the Bank of Israel highest ever foreign reserve balance, which stands at $222 billion. This represents approximately 42% of GDP. Such significant reserve support a case of currency devaluation if the situation gets worse. But actually, in the last 6 months, we're witnessing a strong confidence of both local and foreign investors in the Israeli economy. We're seeing an increase in foreign investments into Israel. The level of direct foreign investments in 2024 is higher than the level of 2023. This has been supporting a very strong currency. And actually, as we speak, the Israeli shekel is at a higher level than its level before the war. Next slide, please. So now that we've pointed out the challenges, let's look at what we believe are the factors that will help us overcome them. First factor is Israel's demography. Israel is the only country in the world which is a real hybrid between a developed Western economy with emerging market growth characteristics, which are the following. First and foremost, Israel has the highest natural fertility rate in the OECD. Israel also has a particularly high percentage of a young population. Israel is one of the only countries in the Western world with a positive general growth rate of over 2. If you look around the world looking for growth, most Western countries, especially Europe, are suffering from a negative population growth. In a lot of countries, it's close to 1, which is a real negative population growth. The second factor supporting is the tech leadership. One should not underestimate the contribution of Israel's tech sector to its economic growth. The tech sector generates 20% of Israel's GDP and accounts for more than 50% of the country's export. Israel has the highest expenditure in R&D as a percentage of GDP relative to the OECD countries. Just to give you an understanding, just yesterday, the global company Salesforce announced an acquisition of an Israeli company for $2 billion. This is the third acquisition of Salesforce in Israel in the last 2 years. The third factor is the defense sector, the defense technology. There's a significant interface between the defense industry and the tech innovation in Israel, which is expected to draw huge budgets and investments in both sectors, which will support growth in the economy. Again, another example, just a few days ago, one of Israel's company, Elbit Systems, announced a contract with a European country to sell its flagship product, the UAVs, in a deal worth $350 million US. Fourth is our natural resource. Not like you guys in Australia, we have only one natural resource besides our human resource, which since its discovery is the natural gas reservoirs in 2010. We became energy self-sufficient and also export gas to the region. Our biggest client is actually Egypt. And the last factor is consumer confidence. We believe that the pent-up demand of consumers due to the situation in the past year will eventually burst back and generate growth once the war ends. We must point out that 2 days ago, the GDP figure for the third quarter of 2024 was released with a very strong growth figure of 3.8%. This reinforces the signs of recovery we may mention. Next slide, please. So here's where we see the relevant upside in the stock market for you, our investors. If we are correct about the assumptions that we discussed, then Israel's stock market is at a very interesting point and has a very significant upside potential. The gap between the stock market indices in Israel and the US is at its highest level that it's ever been. The gap is a result of the events, obviously, in Israel in the last 2 years, which generated a significant underperformance, but also created a unique opportunity in the form of low multiples. On the left chart, you can see the pre-war chart between the gap, between the US indices in Israel, and on the right-hand chart, the gap that has widened in the past 2 years. The gap is more than double. We strongly believe that we will see a significant outperformance of the Israeli share market, which will narrow the gap back to its normal level. Next slide, please. So why the change of strategy and why now? First thing, Alpha has the know-how. Alpha has proven over the past 20 years its ability to outperform the market by managing long equity strategy funds. The second reason, a very significant one, is the cost of downside protection. At the start, when we launched the fund in Australia, we thought wrongly that Australian investors will seek a downside protection when investing in Israel. Our investors and the resilience of the Israeli market have proved us wrong. We truly believe that eliminating this protection will generate significantly higher returns to our investor, even more than the 3% per annum cost that the fund incurred since inception on a yearly basis. The third reason is the benchmark and hurdle. We're putting ourselves against the market. If we cannot outperform the market, which is the hurdle, and create alpha to our investors, then we will not receive any performance fees. And the fourth reason is a macro one, which is future growth. We believe that Israel's key growth engines of tech, demography, and investments in infrastructure will generate significant growth in the coming years. Finally, before I talk about performance and returns, I would like to just end by saying that we are long-term investors. We never try to time the market. But in this case, we truly believe that the time is right. It is literally just when it's darkest before the dawn. Next slide, please. Ending my part of the presentation and talking about the most important thing, obviously, for you investors is the bottom line, the performance. As for the current strategy, although the calendaric year has not ended yet, and despite the geopolitical circumstances, we've had a very good year of returns. We can also say that if you look at the returns since inception, our annualized return in both classes are relatively good, taking into consideration COVID and the underperformance of the Israeli market in the last 2 years. Next slide, please. This chart, in our mind, can very clearly and strongly illustrate why this change will benefit you as investors. This chart shows the positive impact of using long-only strategy versus a strategy that is a permanent protection, like we did up until now. You can see that being without a downside protection and eliminating paying a yearly premium of 3% as a form of an insurance, we can enhance our returns dramatically. In this period illustrated in the chart, during the last 3.5 years, the long strategy has provided a significantly higher return in excess of 12%. This is why we are very confident that this change incorporates both a significant benefit to you as investors and is the right investment decision for us as fund managers. I'd like to thank you, and I will hand over to my partner, Gabi, who is the founder and CIO of Alpha, to discuss the strategy.
And hi, everyone. It is always great to see you, although I can't really see you. Hopefully, they will fix it in the next Zoom. So I will try to be short, since Segi has described most of the macro parameters and the situation in Israel during the last year, and the touch, of course, about the potential that we can see in the market today. And we will be happy to answer any additional questions after. I will start with the introduction of the Alpha Long equity activity, but it is very important to understand that first, it isn't such a big change, and the Alpha Long equity isn't a new structure. The main difference is the state of mind, more flexibility, and lower costs. As Segi described, the Pengana Alpha Fund gonna be as much as like our Alpha Long equity fund, which I'm going to speak about. Again, there are many similar holdings with some changes that I will try to explain during the presentation. The first bullet is quite clear, I believe, for most of you, since it's the same in all our activities in the last 20 years. Active investments, mainly in Israeli companies for the long term. That's where the most of our time goes, and I believe that this is the place that we benefits the most. In the core strategies, we have now mainly 3 core strategies with no equal weight, since it might change during the opportunities that we can see in the markets. Please note that it will give us more flexibility to move between positions and different opportunities, and I believe that this is one of the most relevant changes in the fund. The first one is long-term investments in Israeli companies with a high return potential. Part of them are technology companies, such as Qualitao or Telsis, but not all of them. It can also lead to the situation that we will decide to hold one of their foreign competitors instead, or in addition, if we will decide during our DD that they has the great opportunity, it is a great opportunity, or it will be quicker or on times that the Israeli stock exchange is closed after 5:30 or on Fridays or holidays, of course. The second one is companies with a unique growth horizons. Tzemach Hammerman actually is a great example of company that had an underperforming in the first 10 months of the market in Israel, but now they've got a purchase offer much higher, actually, about 30% higher from the market value. Actually, the purchase offer comes from one of the biggest companies in Israel that I assume most of you know, which is Azrieli. They have understand the opportunity, and since they are big enough, and Tzemach is a quite small company with a market value of about 220 million US, they prefer to buy a good company and even pay the premium of about 30%. The third one is special situation, but in a much wider range than it used to be in the current fund, which includes some investment opportunities in foreign competitors, as I described, instead or in addition, if we will decide. Those strategies will give us much more flexibility and even the potential to make some more short-time profits in addition to the long-term investments that will stay the core business of the fund. Summarize this slide, I will say that the main issue here is the state of mind. When you manage long fund, but you need to do some hedging, even if it's just from huge decline, it will always influence. As we can see, even in this year, it was quite difficult times during the last year in Israel, as we all know, and the cost of hedging were quite high. So it leads us to be much more careful, but we pays a lot for this kind of careful. Next slide, please. So in this slide, I will explain briefly the benefits of the long only and our add value, of course. In the first bullet, I've already talked about our expertise and deeply due diligence in Israeli companies. Alpha explore and know how to invest mainly in high potential companies without putting so much emphasis on the volatility. Long only fund are the best vehicle for that, for long-term investors. And it has become even more obvious in the last year where we can find amazing opportunities for the long term, as we can see now, but we should compromise on some volatility that can happen during such times when opportunities come. The third bullet is the hedging cost, which Segi talked about, and I'll try to elaborate. Since it is very important, and after a few years, we can see its influence and measuring its cost. The existing strategy operates in a more conservative manner that includes ongoing hedging. As a result of the change of strategy, the fund avoids an annual return resulting from this cost, which is estimated at around 3% per annum, which is very high. Next slide, please. So combining commercial opportunities alongside long-term investments. While focusing the core portfolio in long-term investments that characterize the Alpha Group, the fund combines commercial opportunities with short and medium investment horizons. These opportunities are made possible thanks to the ongoing analysis, research, and analytical coverage of the companies in the market, alongside leveraging the fund size advantage, which is very important, of course. I'll give some examples on commercial opportunities, which is like the first one is the index updates, which Argo is a great example of that, and I won't touch it in too much details. But every few months in Israel and actually in most of the exchanges in the world, you can see that there are some special situations that companies goes in and out from the main index, and you can actually earn a lot of money from that strategy. Release of financial statements, usually same as when the company gets in or out from the index, it creates temporary higher volatility in the market. we can trade or increase or decrease our position at this time. Actually, we do it a lot. Companies like Telsis is a great example, and maybe I'll touch about it later. Under the radar, actually, we spoke about the small cap public companies in Israel that have a huge potential. Tzemach, that I gave an example before, is one of them. They've got limited coverage and less correlation to the market, and that actually creates the opportunity. Usually, they are trading much below their value. Qualitao, I think, is the best example, but there are many others. Integration of positions in market or activity outside of Israel, I talked about, and maybe I'll skip, but it's mainly companies that we make as part of our DD on the Israeli company. We are doing a DD on their competitors out of Israel. Sometimes we can find that the competitors can be even better. Sometimes we just want to be exposed and to change the exposure to the sector after hours in Israel or on the weekends or holidays. So we can do such an investment, which we cannot do in the current fund. Next slide, please. So I will summarize by saying that today we feel that there is a great opportunity in many Israeli equities, and the big risk, actually, which has not disappeared, we cannot ignore of it, is mainly for the short run. If we will have a bigger war and a much longer period of war, but we can see it today as a very limited option. Few sectors that we can find great opportunities there is the Israeli financial technology infrastructure, which actually became a bigger position in the last few months. Energy that we believe in the last few years is a great sector, and of course the defense that be very important in the last year, as it used to be actually many years ago. I will summarize with the same sentence I finished my previous webinar almost a year ago. There are times for turnaround and special situations, and there are times for good companies that leads in their segments in a fair value. We believe that today is the right time for this kind of companies, great management, not to leverage because of the interest rate all over the world, although it's a bit lower, it's still high, and of course, companies that are working in a high-growing sector.
The first question is, how has the TA125 index managed to perform positively despite the geopolitical instability? What factors do you see contributing to this resilience?
Gabi, do you want me to take it?
So I always say that it's very difficult to answer about what leads the market to be in a good position, but I think that the structure of the Israeli market is a resilience, and I try to explain. There are few companies, duly listed companies in Israel, such as Camtek, that we spoke many times on our presentation, and Nova, and of course companies like Teva and so others that didn't influence from the Israeli war and actually benefits from the semiconductor industries and NVIDIA, of course, all over the world, and they actually helps a lot. Also to our funds, but also to the Israeli index in the first half year of 2024, actually from January until exactly till July. Since then, we can see sectors like the infrastructure and financial that leads the market. I don't know if everyone here knows, but the Israeli markets is for today is almost 20% up this year, which is amazing, Danny, as you said. And it's mainly because I think in 2023, because of the legal issues in Israel, the market wasn't that good. And the companies and the financial result of the companies are just amazing. So summarizing, I think that's mainly three things. First is the underperforming of the Israeli market in 2023. The duly listed companies that helps us in the first 7 months in 24, and the high growth and great financial statements of the Israeli companies, mainly in the segments of infrastructure, financials, and a few others in the last few months.
Thank you. Following
And
on
maybe, sorry, Danny, maybe another thing that I just realized that many Israelis are not going to vacations out of Israel in the last year, and that helps a lot for companies that are selling their products in Israel. Sorry.
Following on that, then, which sectors in Israel have been most affected by the ongoing conflict?
So
I think, sorry.
No, you can of course jump in and helps me here, but I think that there are sectors that benefits and there are sectors that hit about. So the one that benefits, I believe, are the one like the infrastructure that maybe it's like a hiccup today because they are not building too much, but we all understand the potential. The second, of course, that benefits a lot is the defense. The one that get hit, I think, a bit can be the residential part in Israel. And it's not just because of the war, it's actually mainly because the interest rate stays higher for a longer period than expected. So I think that the residential is one of them. And I think that the lack of employees in the last year actually hurt them as well. So I think the one that hurt is the residential, and the one that actually benefits is the defense, and the one that gonna benefit is the infrastructure. Sorry, Segi, if you want to add something.
No, I think you covered it.
Yeah, I've had another one come in terms of Israel being known as the startup nation, which is, are there examples of listed Israeli companies now that are adapting or innovating due to these challenges, particularly in technology and defense? Do you have any examples and anything that you might be thinking about investing in?
So I believe that you will see many new IPOs in the defense sector, or because they are, as I think that again, Israel is their startup nation from the defense, and I think it's gonna explode in the next few years. I think there is a huge potential. We can see many new entrepreneurs that just moved into that segment. So we believe it's a good thing for Israel.
I will just add that you have to remember the linkage between civilian and military technology in Israel. What is happening in the last year in Israel, obviously, as a war is a bad thing, but on the other hand, it gives the ability for people in the research and development side to actually create things that we will be amazed in the next 2-3 years. We are already amazed of the things that the military R&D has worked on for the last 10 years, and we are seeing how it's protecting the aerial part of Israel. And believe me, the things that are coming out in the next few years from Israel will be stunning, the world as well.
Oh, no doubt. If the conflict continues for an extended period, what are the potential long-term implications for Israel's economy and its financial markets?
So maybe I'll answer this one. So obviously this will affect a lot of the topics that I've touched on in my presentation. Inflation, will stick, a chance of the currency devaluation, but and again, other factors like GDP, and deficit. But at the moment, it does not seem to be the scenario. There's there's a high probability that we are on the verge of ending the northern part of the war. I don't know if you guys have been following, but we are having today a very big delegation coming from the US, in Lebanon, and pretty much trying to solve this. But if the war does continue beyond the first quarter, then we're obviously going to see an effect on the economy. But let's think of the other option, which is more, in our opinion, more logic. Think about what will happen if we are about to be ending this whole thing. Where will this lead us to? And that's why we are very, very optimistic.
I guess that kind of goes into the next question. Considering the business decision to remove its risk hedge, how do you assess the potential downside and upside in light of the current conflict and current situation?
So, I'm sorry, can you just repeat it? I couldn't hear it.
Considering the decision to remove the risk hedge, how do you assess the potential downside and upside in light of where Israel is at the moment with the current conflict?
Gabi, do you want to take it?
So I don't have the details in front of me, but first about the upside. So we believe that the upside is at least the one that you also in the graph that Segi present about the difference between the Alpha Long equity fund and the Pengana Alpha Long equity, mainly because of the hedging costs, but not only. We believe that in the current situation in the market, the upside is much higher than that, of course. Then that's why we are making this change. About the downside, I think that it might be a higher volatility. I cannot see the numbers in front of me, but if we will look on the long only fund and to see how much, what was the worst month compared to the Pengana Alpha Fund, it's not such a huge difference, mainly because, just reminder, the Pengana Alpha Fund was actually protect us from a huge decline from more than 15% in a specific year. Those times don't happen that much, but we should remember that if we will see the market collapse in 30%, then it might be a higher loss for the short term. After so many years of doing mainly long, but also the downside protection, we can see that most of the time it costs you more than its benefit.
In the interest of time, I am going to wind up now. Thank you to all for joining us today and to those who submitted questions. For those we never got to, we will get back to you directly. I hope you found this useful, and if you do have any questions, please reach out to Pengana or your local BDM, and a copy of the slides in this recording will be emailed to all who registered. Thank you again for attending, and have a great evening.